Okay, well, maybe we'll just kick off.
All right. Well, for our visitors, I'm Niki Hubbard. I'm the residential loan officer with V.I.P Mortgage, and Taira asked me to do a construction loan or land and construction loan preview. So, Taira, tell everybody who you are.
Yeah, so I am a real estate agent currently selling on Oahu and Big Island. I go back and forth between both islands, but mostly boots on the ground for Kona. Um, and yeah, I know there's a lot of just misconceptions on the construction loan programs for first-time home buyers and then just home buyers in general. So I thought this would be a perfect time to you educate all of us, and then we can ask any questions that you guys might have at the end of this. I think Nikki, you're going to go over like a little slideshow, right?
Yeah.
Okay.
Mhm.
And I think we have honestly a lot of first time home buyers that were interested. So I think maybe if you could go over like the one-time close construction, the USDA program, and then maybe the requirements too on that. That'd
Okay.
be awesome.
Yeah, I can touch on that for sure. I didn't put a slide for the USDA, but will remind me if I forget by the time we get to the end.
Okay, perfect.
All right. Okay, so we'll get going. Very unceremoniously, hope to tell you the ways that you can buy a lot and build a house. And there's a couple of different ways that you can do that. So first, of course, I have to have this disclaimer. So everything we say is an estimate, it can change. Just FYI. One of the things I talk about when we're deciding if we should buy land and build a house is just some of the pros and cons between buying and building. So sometimes we think that it's the best way to go is to build, but it may not be. So it's a much longer process if you build, and there are fewer financing options. Whereas if you buy, you could get into the house within a couple of months, and you have lots of different loan products that you can choose from. The benefits, though, is you could build exactly what you want as far as the design, or maybe be in exactly the location you want as far as buying a lot. Whereas if you buy an existing house, that may not be the case. So those are just some things to consider when deciding which way to go. And when I pre-qualify customers, I don't force you to make a decision before you pre-qualify with me. Just know that we can discuss both as we go through the process. So obviously, the most common way to buying land and build a house, people will use cash. Then there's no worries about what financing requirements are, but that's not a reality for everyone. So we have land loans, and then we have a land and construction combo loan. And then in the details of financing, you have the land and construction combo loan, but there is also a construction to perm loan. So I'm going to talk about the differences of those construction products in a second. I'm going to talk about land loans first. So land loans require more down. There isn't really a no down land loan product. So you have to put at least 20 to 25% down depending on where you go for your land loan. So if you come to me for a land loan, I have a 3-year interest only land loan that requires 25% down. And I have 2 different investors that will allow you to do that. If you go to a credit union, though, you may be able to get a lower down and a longer term. So I do often encourage local home buyers to, if they are able to do a land loan, to go ahead and investigate at credit unions, which I can't really broker to, just to make sure that they're getting the best product for that step if we need to take that step. If we don't have the ability to do the land loan, then we're going to be looking at the land and construction combo loan, which I'll, like I said, talk about shortly. So comparing the 2 construction products we have, we'll just spend a few minutes doing a comparison. So construction to perm loan means that you are going to finance both the construction and the fully amortized loan all together in one. So it'll have a 12-month interest only period while you're building the house, and then it'll automatically convert to the remaining 29 years fully amortized principal and interest payment. It has more competitive rates, and you can lock your rate in for that product at the beginning of construction. It requires that we have bonding and permitting, which I'll talk about later. And then the loan amount has a conservative calculation, which I'll show an example of in a minute. Compared to a temporary construction loan, which can combine the land and construction in one, it's a 1-year interest only loan, and you have to refinance at the end to get into your 30-year fully amortized loan with your, principal, interest, taxes, and insurance included. Still requires bonding and permitting, but this loan is very cool because it doesn't necessarily require a down payment, and provided when it appraises, you have 20% equity above the costs. So I'll show you an example of that in a minute. And I'm going to skip over this slide to get to the example. So for a construction to perm loan, say you went and bought the land. Let's say the land is $150,000, and we're going to build a $250,000 house. So total costs are going to be $400,000. The lender is going to allow us to finance just $320,000. That's 80% of the total cost. And what's the challenge here is that, say we had the down payment, so we put 25% down on that $150,000 lot. We have a land loan for $112,500 left. When we add the $250,000 construction to that land balance, we now need $362,500 to move on to the next phase, but we only are able to finance $320,000. So we need another $42,500 to use this product, which means at the very beginning, before we bought the land, if we didn't have approximately $70,000 available, the 37 plus the 42, we should not have gone into that program because we wouldn't be able to finish. We wouldn't have enough money. If you do have enough dollars, then obviously this is a good way to go and accomplish buying a lot and building a house. It's not the case for a lot of people. So our alternative is the temporary construction loan, which I mentioned that I would explain more about. Okay, so this product, same scenario. Now we have $150,000 lot. Oh, it says 100. Sorry, there's an extra zero in there. $150,000 lot, $250,000 build. So total cost $400,000 again. As long as it appraises for $500,000, we can finance 80% of that, and all $400,000 can be financed. If it appraises for more than $500,000, we can even finance in the closing costs, which is amazing. So this product can enable us to buy a lot and build a house with no down payment, and is very popular because of that. One of the important things that we need to talk about, which we will talk about, is the timing of this. And so I'm going to just show you an example of what the payments look like during construction on a $400,000 example, and then I'll talk to you guys a little bit more about timing. And then yeah, okay, this is really small, sorry guys. I don't know how to make it bigger for you, but basically when we do a construction loan, your payment starts out low. You're only making the payment based on the part that's been dispersed. So at first we're making a payment on the land, and then as construction starts, there's going to be 5 draws during the construction project, according to the contract. This is a standard draw schedule. HPM and Hansard are the bonding companies that handle the construction funds, and they'll have slightly different schedules. But basically, start of work, a draw goes out. The second draw goes out when the foundation is complete. Third draw is when the roof is on. Fourth draw is when the drywall is finished. That's 90% of the construction contracts dispersed by that time. And then the remaining 10% is not dispersed until it's finalized. So this project, your payment will start out low and increase as the project goes along. And then in the big blue box there, you can see the end result in our higher rate environment doesn't have a significant drop in payment, but if rates get better, there is often a significant drop in the payment for your 30-year loan when we refinance you. So we want to make sure when we qualify people, they understand that the payment can go high at the end of construction because we're in a interest only loan at a higher rate, but that the end goal, which is the 30-year payment, is affordable to you because that's the one you're going to be making for 30 years. The fourth and final draws, that's just while we're wrapping up construction. So you don't have to make those for 30 years. You just have to be able to handle that payment for the duration while we wrap up the project. So how do we get qualified to do this loan? First step is to actually just get pre-qualified. and I'll give you a hint on what I need in a minute. And then we're gonna pick a design and find out from a contractor how much it's going to cost to build. So I encourage you to do this work of picking a design and finding out how much it's going to cost to build before you get into contract or in love with a lot. Because as soon as you're in contract, we have a seller that has to be very patient with us and does not need to be any more patient than they already need to be. I will encourage you to make an offer with a 6-month escrow. But knowing that you already know what it's going to cost to build and who's going to build it, that way, as soon as you're in contract for your lot purchase, you can just turn in the plans for finalize, like architect stamps, and put it in for permitting. So right after you get qualified, you're going to have your total max qualification, and we're going to figure out what is more important to you, the location where you buy the lot or the house that you build and live in, and then we're going to work backwards from whichever one is more important. So let's just say that it's the house that you want to build that's more important. So if I have our max qualification 400 and say the house you want to build is 200, then we have 200 left for land. So you can go find a lot that fits in your budget. If we find out the house we want to build is 300 and we only have 100 left for land, then it's going to really direct us where we're going to buy land. And so those steps we want to do when we are not in a hurry, because it's your home you're going to own for 30 years and we don't want you to feel rushed. So, I mean, you're going to own it for your whole lifetime, not just 30 years, sorry. So I encourage customers after they get pre-qualified to go figure out what they want to build and who's going to build it, how much it's going to cost. Then we come back and talk, make sure it fits in our budget. Then you can go shopping for the lot. Once you get into the lot, then we're going to start the loan process. That's step 5. Finalizing the plans, pushing them in for permitting, steps 5, 6, 7, 8. Bonding has to be done, and that is a free guarantee that the contractor applies for. The banks love it because it guarantees the project will get done. And they are lending money on a lot that doesn't have a house on it yet. So there is risk there. But the bonding, it is also important because it's a place where the money gets metered out instead of just handing over all the money to somebody and hoping they build the house. It's metered out. So nobody runs out of money and doesn't finish the house. And then once the permits are out and the bonding is, approved, we can do basically final loan underwriting and move to closing. So all of this can take a long time. Once we're in contract, if it takes a month for the plans to get drafted up and in for permitting, and then it takes 4 months for it at permitting, and then when it comes out from permitting, it takes a month for us to wrap up updates and docs and all of that. That's 6 months. So that's the main reason why we pick the design and pick the contractor before we get in contract, because then we don't have to ask the seller for longer than 6 months. I have hopes that it gets quicker. And if we don't have this time, then we fall back to, can we get a land loan? And the goal for me is to have as few closings as possible. So if you have to do a land closing, then a temporary construction closing, and then a refinance, you've now had 3 closings. If that's the only way we can get it done, we are going to know that up front and prepare for that from the get-go. But most of the time, what we want to do is 2 closings. You're either buying the land with the land loan, and then using that construction to perm product because we have the assets available to get that done. Or we're going to do the land construction combo loan and the refinance, and that's going to be the 2 steps to get you into the house. Now, there are some other little things that I wanted to share in no particular order. When we are in contract and we are getting an appraisal, the construction to perm loan is much more strict. You have to have the full set of architect stamp plans signed by the contractor and the customer on every single page in order to order an appraisal. So we have to basically have the house permitted to start the construction to perm loan. So you're going to buy the land before we start the loan. We're still going to qualify you before you do anything. That way you're not getting stuck anywhere. But on a temporary construction loan, we can use draft plans. It doesn't have to be the permitted one. It can be whatever the architect is going to stamp. A lot of times we use house packages because everybody's familiar with them and you can get them quickly. But if you do a custom home, you can use a custom home. We just, we need floor plans and elevations and some kind of specs that shows the appraiser what's going to be included, what the finishes are. And and they're fairly general on that one. So then we can order the appraisal on a temporary construction with those less finalized plans. Okay, I did have a slide for bonding. I kind of explained this already. Bonding, the contractor gets it, and just so you know, it has its own process. It's like its own underwriting. So it does take time. It's not something that you can just ask for over the phone and receive. So I will, if we are doing this, I will coach you as to when you need to make sure a contractor is in touch with the bond company, and making sure that I get in touch with the bond company too, so that we know when they're going to be done. We can time our closing around their documents getting to us. And okay, I said I would tell you how to get pre-approved, and basically it's the same documents needed for any loan. So I need to know all your details, where you live, where you work. I need to see your pay stubs, your tax returns, your W-2s, your bank statements, and your ID. And conveniently, you can do all of this online. So you have an online application. If you go to my website, which is my first name, last name, .vipmtginc.com, which will be up on the next slide, you can get to my apply now link. You're going to create a username and password. You'll put in all the information you know about yourself. If you don't know the answer, you can skip it. There's nothing you can do wrong in there. If you get stuck, I can force it forward. Even if it's blank, I can fill it in for you manually later. But it creates a portal for you where you can upload your documents securely, and that's what's important. We don't want you to be emailing in your tax returns with your socials all over the internet. But sometimes that happens. So I'll take your documents anyway. You can get them to me in person. You can drop them off at any of our offices, or through the portal, or however you send them to me. Fax is even okay. And that's it though. You don't have to know what you want to build. You don't have to know where you want to live. We just start and get you a max, and then we figure out what the best way to use the programs to get you into a home is. And okay, I know I'm supposed to talk about USDA. So USDA is the USDA Rural Development is a loan that is often called the first time home buyer loan because it doesn't require a down payment, and it's very popular. And on our island, you can use it anywhere except in Hilo. It does have income restrictions, so you can't make too much money. But it also has really strict debt to income ratios. So we definitely want to have all your documents and qualify you for that product. And they do offer a construction loan as well. So it would be the same process as the temporary construction loan where you buy the lot and build the house in one. Except you're following the USDA guidelines, which honestly are a little bit more strict. And so for that reason, I haven't really used that product very often. We do have investors that will allow us to use it, but we just haven't, because we have the credit unions product, which is very, flexible for people that debt to income ratios are higher. So we can price those out and compare them. And then the last one that you might ask about, or two more things I can share. Is VA. VA does offer construction, but I don't have an investor that allows us to use it here, but I have not ever found one. So I'm sorry, I can't offer that. And then I also can use our temporary construction loan for helping financing on Hawaiian Homes land. The lender is approved, and so we are able to help a leasee build a house on their property. And there are quite a few more steps. So if you have that situation, we're going to talk about that on the side separately. And yeah, that is what I wanted to share today. I hope that wasn't too fast, but if you guys have questions for me, you can shout them out now.
Hi, Noilani. How are you?
Good morning, everyone. I'm doing well. Thank you. Happy holidays. I totally missed the whole thing. I'm so sorry, Nikki.
We recorded it.
Okay, good. Well, as long as everything kind of is the same, is there anything different than what it used to be when it was?
No. Okay, you guys, this product, I have known of this product for 15 years now, and it hasn't even, the interest rate hasn't even changed. And the whole time I've known of it, still the same. So, it's a great product, and it's, yeah, you're right, Noilani, it's all the same.
It's the same. So it's 8.95 interest only, 12-month construction, pay as you go.
Yep.
Still the
Licensed general
credit
contractor.
union. Yep.
Yep.
No owner builders.
No more. That changed, but that's been a while.
Yeah. 80% value of the projected, or 80% loan of the projected value.
Yep.
I know that there's some, you know, just like on the qualifying, the DTIs and things like that. I know it takes like some creativity sometimes, and I know that you're wildly successful with this program. Is there anything that you can say?
One of the nice things about this product, if we're like comparing it to using USDA construction instead, they have a much lower credit score requirement. So they will finance for people with 600 credit scores. So 600 and above. We can start there, but we have to have a really good strategy for getting your score to be higher by the time the house is finished. When we refinance you, if you're still in a 620, we're going to have very limited options, and you're not going to have a great rate when you refinance. So we have a really strong plan for remedying that during construction if we do the loan at 600, but they do allow it. And then also they are one of the lenders that will use a shorter average for self-employed income. So if you are a self-employed borrower and you're using that income to qualify for conventional loans in USDA, everybody, it's 2-year average of your net income on your Schedule C, or however your self-employed business files. But the credit union will allow us to use a shorter average, or 1-year average, and that can often generate more income and give us more qualification. So despite that, we still have to make sure you qualify for the refinance. So we have to still do the calculation for the 2-year, make sure the refinance that still works. If we finance you more because we gave you more income, we have to make sure we can refinance you. But those things make it way more popular than the USDA, because USDA is no wiggle room, and they're much stricter debt to income ratios. The credit union will also allow us to add an interest reserve, which means that they'll, if your appraisal comes in with enough equity and enough value, you could finance in the interest payments. So you add to your loan amount, 6 months worth of payments, so that you have that money borrowed to make the payments during construction. I don't actually recommend doing that. And there was a time where there wasn't enough equity and we couldn't do that for anyone. But it is an option. So sometimes for whatever reason, we have 2 borrowers where we can't use one of them and our ratios are pretty tight. We add the interest reserve, we can get it done, fix whatever's wrong with the second borrower. By the time we refinance, it's not a problem. We can add both of them, and we didn't get anybody stuck in that. That would be the worst thing, is if you get stuck in the loan, because they do have penalties for not getting out of the loan after the 1-year period.
What does that look like?
They charge you $25 a day for every day over the 13th month. And then if you go past 3 months, it goes up to $50 a day. And then it gets higher after that. So we don't want that to happen. It's not like they're going to make you pay that every day. It adds to your principal, and it makes the refinance amount higher.
Yeah.
So that'd be worst case.
I know that a lot of loan officers, not a lot of loan officers, I know some loan officers don't like to do these loans anymore because they take so much work. You know who I'm talking about.
They're my favorite.
Yeah. Are they your favorite?
Yeah. Just send them to me. Yes, it is a unique product. It is a very manual process. So there is no like portal or like online guidelines or even instructions.
I actually prefer that. I prefer it because it's like, okay, way easier to understand, and it's just like cut out the fat.
Yeah, there's not a 4,000-page document instructing us how to do this, but then there also isn't a 4,000-page document instructing us how to do it. So yeah, I love to do construction. So my background is my dad is a contractor growing up. When I came home from college, I worked a terrible job, and then was lucky enough to get to work at Hansador. I worked there for 8 years maybe, in bonding there. So I was the person who handled funds on projects, and I got to meet the lenders who helped finance projects and meet all the contractors, and it was great. And but stressful time, and then the 2006, 7, 8 crash happened and I no longer worked at Honsador, but I got picked up by a broker that did these loans and did them maybe the most out of anybody on island. And they taught me all about them. So I was so happy to continue to be in the construction industry, but also then do this part, which is super fun as well, finance and help people get into the homes. And it's much more hands-on to the getting into the homes part. And so that's why I really enjoy doing it. And maybe pre this crazy COVID market, I used to say it was a quarter of my business was construction loans. Right now, it's not the case, but I feel like it's going to become a higher percentage again, because there is less houses available to buy and there's still high demand. So it's very competitive to buy, and there's land available. So if we can educate borrowers about using this program or any of these programs, a combination of the programs, and educate agents so that they can educate their sellers and the sellers can be patient, and then hopefully the county will get their stuff together and it'll get better and better and get more people into homes.
Definitely. And I apologize again if I'm being repetitive, because I missed it, but so the things that I always tell my clients when I'm like, okay, we can do this, we can do land, we can do construction. Yes, the first challenge is finding a seller that will cooperate with the length of the escrow that we need, which is, what do you recommend at this time? 6 months?
Yes.
Okay.
At least.
So that's the first challenge. But then after we cross that bridge, it's more of finding the contractor, designing a home that can be built within the budget that you provide. So it's a matter of architect, builder, and loan officer coming up with the budget and designing a home within the budget that they can build within the budget, right?
Yeah, I think you did miss that. So my thing, what I do is qualify the customer, give them their max, and then before they get married to a lot that they love, they need to figure out what they want to build, who's going to build it, and how much it's going to cost.
Gotcha.
Before they
Okay.
get into contract. So all that pre-thinking and designing, just even preliminary, is done
Mhm.
before we're in contract and then on the seller's time.
Gotcha. Okay.
Homework before, obviously, until you know exactly what lot and maybe like the slope and whatnot, you can't finalize
Sure.
things, but you can get a good idea of,
Yeah.
how does the layout look? What kind of roof do you want?
Mhm. Yeah, totally.
And a contractor that you have a relationship with, a contractor that's willing to be on a team. So
Mhm.
we don't want a contractor that is unwilling to
Doesn't
do
know.
bonding. We don't want a contractor that's unwilling to give you preliminary estimates because they are, not able to look at full set of plans. Obviously, they need full set of plans to finalize bids, but we are not going to pay for plans if we don't know if we can afford them.
Right.
So we have to have somebody that understands that and it has a heart for, a little bit of work ahead of time. And they exist. So.
Do you have some favorite contractors that you work with?
I try not to be the person referring to contractor because I know a lot of them. And also it is just similar to picking a loan officer and an agent. It's who the customer is going to have a good rapport with, and pretty much similar to loan officers and agents. Everybody knows somebody that's a contractor. So
Sure. And to be fair, it's a lot like different areas of the island too. Like for Hilo, you probably have preference, or Honoka'a, Waimea, or this side or whatever.
Yep. Yeah. So I can sometimes if they say, oh, they like the HPM design, like HPM has a list, you can ask, if they saw a house on the road, go ask that guy who built it, or the customers really need to have a rapport with that contractor because they're going to work with them for a 1.5 years, from design to execution. So I might work great with them, but they might not. So I would be the last person to give the referral.
Gotcha. Okay, awesome. I'm so glad that you're still doing this, and I'm glad that you're still out and about educating everybody, because it really is such an amazing program.
Yes, it is.
I mean,
Thank you. Thank you for knowing that
Yeah.
and sharing it
absolutely.
too.
Yeah. Yay.
Yay. I also wanted to say too, I don't know, I know that we have 2 other ladies on the call. I don't know if you guys are like first-time home buyers, or are you guys agents as well?
We are I'm a first-time home buyer. And I'm actually on Oahu. So does that
Yeah.
make a difference?
Yeah, I mean, it does make a little bit of a difference just because of price point and stuff, but I think the first step for you would be pre-approval. And this whole process could be like very overwhelming. And so I think leaning on a realtor and a lender, a really great lender, which Niki is perfect for. So I think that would probably be the first step. And don't feel like you're like, you have to know every step, because you lean on me and the lender for sure.
Yeah.
Well,
Our
so
credit
my
union- Oh, go
sorry,
ahead.
my in-laws, we live on their property right now, and it's a R5, so it's in the CPR process. So what we want to do is buy a lot from them and build on their here.
Okay.
So
I have ideas for that.
and we're in Haleiwa, so it's like you know, it could appraise for like $1 million over as of right now. So
great.
I'm like, let's do this now as soon as possible.
So the credit union product that allows you to combine the purchase and build is only available for Big Island.
Oh,
I don't know of any other credit unions in any other islands, except for Molokai was trying to establish one for a program similar recently. The way that you could do it, because it's from family, you have a fantastic opportunity if they are willing to work with you. So if they allow you to do the build and pay them off after, you could do the construction to perm loan, and then you could refinance at cash out refinance at the end to pay them back whatever the lot would have cost. And so that's a workaround. If you have to buy it from them first, then you'd have to use the 2-step where you do land loan and then the construction to perm.
and then we would need the down.
Yeah, and the hard cost calculation for at the time of construction too. Depends how much they're gonna need, and so we just do that math. We just pencil it out once you know the numbers, like how much they want to buy it from, or have you buy it from them for.
What if we get my husband on the deed already? So it's
Yeah,
like we own it.
That would be, but the trick would be to keep the cost low for the construction to perm part.
Oh yeah,
Pay them at the end. But we don't have, I mean, that's just an idea that because it's from family, but we would do all that figuring out in a one-on-one conversation.
Yeah, can we schedule something?
Sure. So I don't know if we captured your contact information. If you want to stick it in the chat, then we'll save that.
Yeah, what do you need? Just my email or phone number?
Both if you can. I know your hands look full with a lovely baby.
Oh yeah, he's sleeping, but
I think is Barry your other half?
yes, he's my husband.
Oh, okay, yes. He messaged me, so I can always follow up with him as well. And I can always share, or whatever's
Yeah.
here.
Awesome.
Yeah. Christina, did you have any questions?
Tina's looking for her next house.
House with Niki in May.
Oh, okay. Awesome.
They do have land as well. So I wanted to know the process.
Great.
Did
That's
that
awesome.
give you a good idea?
Me?
Yeah. Was it clear enough?
Which part? Are you talking
Like-
about the land?
The timeline part?
Oh, yes. The information was good.
Okay. Thank you.
Send this recording out to everyone?
Yeah. First time doing this, I'm gonna figure out how to send it where it doesn't, like it's not too big, or yeah. I'll figure it
Okay.
out.
Okay.
Yeah, we'll try and send it out to everybody that was signed up on the list, like RSVP. So yeah.
Okay. Thank you.
But thank you everyone, and thank you Niki for doing this and just educating us. It's really helpful.
I'm glad that you guys took the time to jump on, and thank you, Taira, for encouraging me to do this. Because it's outside of my comfort zone, and yeah, apologize for any awkward quirks, but I'm very appreciative that you joined us and happy to share. Okay, you guys have a good rest of your
you.
day. Thank you.
Bye.
Bye.